You know, the financial advice handed down to the middle class is completely different from the conversations happening behind the closed doors of billionaire family offices. The masses are taught to clip coupons, save a tiny fraction of their depreciating paycheck, and wait 40 years to finally enjoy their lives. They are told that extreme frugality is the only path to safety. But the elite? They are playing an entirely different game. They don't just manage their money, they master it. They use a completely different set of rules to bend the global economy to their will. They know that you cannot shrink your way to wealth. Instead, they use specific engineered strategies to multiply their capital effortlessly while the rest of the world stays trapped on the treadmill. Today, we are opening up the vault. We are breaking down the exact hidden financial mechanics used by the 1% to acquire, protect, and scale extreme wealth. Welcome to Orionics, the place where future billionaires come to get inspired. Number 1. They treat their surplus as their most aggressive employee. The average person looks at whatever money is left over at the end of the month as a reward. They think, great, I have a surplus, I can finally buy that new watch or take that weekend trip. They consume their surplus. The financially elite view their surplus capital entirely differently. To them, surplus is not a reward, it is an employee. Every extra dollar generated is immediately put to work. They draft that capital into the market, into real estate, or into private equity, demanding that it goes out and recruits more dollars to bring back home. They are ruthless with their surplus. They understand that if you spend the money you have left over, you are killing the very soldiers that were meant to fight for your financial freedom. Number 2. They use the banking system in reverse. We're conditioned to believe that banks are places where you safely store your money, or places where you desperately beg for a loan when you want to buy a house. That is the consumer relationship with banking. The elite use the banking system in reverse. They don't store large amounts of cash in savings accounts to be eaten alive by inflation. Instead, they acquire massive appreciating assets and then leverage the bank's money against those assets to fund their expansion. They use the bank's capital to buy more cash-flowing businesses, and the cash flow pays off the bank. The bank takes all the risk, and the elite keep all the equity. They don't work for the bank works for them. Number 3. They prioritize infrastructure over the end product. When a massive new trend sweeps the globe, regular investors rush to buy the shiny new product. They want to invest in the app that everyone is downloading or the specific car everyone is driving. But the true masters of money know that consumer tastes are incredibly fickle. Instead of betting on the product, they buy the infrastructure that makes the product possible. If there is a gold rush, they don't dig for gold, they sell the shovels. They buy the data centers, the logistics networks, the payment processing systems, and the raw material. They want to own the toll roads of the economy, ensuring that no matter which specific brand wins the public's affection, they still get paid a fee every time a transaction happens. Number 4. They purchase access before they purchase asset. The most lucrative deals in the world, the pre-IPO tech unicorns, the massive commercial real estate syndications, the private equity buyouts, are completely invisible to the general public. By the time a great investment hits the news cycle, the real wealth has already been extracted by the insiders. The elite know that proximity to power is a prerequisite to extreme wealth. They spend massive amounts of money joining elite networks, attending exclusive masterminds, and positioning themselves in the rooms where the future is being shaped. They buy access because they know that one whispered conversation in the right room can yield a 100x return on their investment. And gaining access to those high-level rooms used to be completely impossible for the ambitious outsider. It felt like a walled garden. And that is exactly why we built the Orionics app. We wanted to shatter the gatekeepers and bring the mentorship of the 1% directly to you. Inside the Orionics app, you get daily coaching sessions and full-length masterclasses from industry titans who normally charge thousands of dollars for an hour of their time. We are talking about proven frameworks for scaling businesses, mastering negotiation, and allocating capital like a billionaire. It is a high-performance mentor right in your pocket. And because you are here with us today, if you download the Orionics app and scan the QR code on screen right now, you will get an exclusive 25% off your yearly membership. If you want to change your financial reality, you have to upgrade the information you consume. I'll see you on the inside. Moving on to number 5. They legally shield their wealth before it multiplies. Amateurs make $1 million and put it in their personal bank account, exposing themselves to massive tax liabilities and predatory lawsuits. The elite master their money by building a fortress around it before the real growth even happens. They use complex webs of LLCs, holding companies, and irrevocable trusts. They understand that in the modern world, owning things in your own name is a massive liability. The secret to ultimate financial invincibility is to control everything while legally owning nothing. When the money is protected by legal architecture, it compounds faster because it is shielded from the friction of the outside world. Number 6. They view inflation as a wealth transfer mechanism. The middle class is terrified of inflation. To them, it means groceries cost more and their savings are quietly evaporating. It is a silent tax on the working class. But the elite do not fear inflation. They use it to their advantage. Because the wealthy hold their net worth in hard assets like real estate, equities, and commodities, inflation actually drives the value of their portfolio up. Furthermore, because they hold fixed-rate debt on those assets, inflation actively erodes the real value of the money they owe the bank. They are paying back yesterday's loans with tomorrow's cheaper dollars. They have engineered their finances so that macroeconomic chaos actually makes them richer. Number 7. They refuse to pay the ignorance tax. There is a specific tax that keeps millions of people broke, and it has nothing to do with the government. It is the tax you pay for simply not knowing how the financial system operates. You pay it when you take on bad consumer debt, when you miss out on compound interest, and when you fail to negotiate your worth. The elite refuse to pay this tax. They are aggressively, relentlessly curious about the mechanics of money. They read the tax codes, they study market cycles, and they hire the smartest financial strategists on the planet to uncover legal loopholes. They treat financial literacy as a matter of survival, knowing that what you don't know will absolutely cost you a fortune. Number 8. They optimize for asymmetric risk. Normal people think that making big money requires taking massive, dangerous risks. They think you have to bet your entire life savings on a single idea. But elite money masters despise losing capital. They do not gamble. Instead, they hunt for asymmetric risk. They look for opportunities where the absolute worst-case scenario is losing a small, defined amount of capital, but the best-case scenario is an exponential, life-changing return. They take calculated bets where the math is wildly tilted in their favor. By making dozens of these highly calculated asymmetric bets, they mathematically guarantee that their few massive winners will completely eclipse their minor losses. Number 9. They buy back their financial bandwidth. Ego tells you that you have to manage every single penny, trade every single stock, and oversee every minor detail of your business. But the moment you do that, you become the biggest bottleneck to your own wealth. The truly wealthy master their money by completely delegating the day-to-day management of it. They hire family offices, elite accountants, and ruthless operators to manage the machine. They gladly pay a premium to buy back their mental bandwidth, reserving their own cognitive energy purely for high-level, strategic decision-making. They don't want to be the best manager in the room, they want to be the architect of the room. Number 10. They decouple their emotional state from market volatility. When the stock market drops 20%, the average retail investor panics. They let fear dictate their actions, selling their assets at the absolute bottom just to stop the emotional pain. They treat investing as an extension of their nervous system. The elite have completely severed that connection. To them, money is just data. A market crash is not a tragedy, it is an incredible clearance sale. Because they have insulated themselves with massive cash reserves and solid cash flow, they can look at a bleeding economy with cold, surgical precision. They deploy their capital aggressively when there is blood in the streets, absorbing the wealth that the panicked masses are throwing away. Number 11. They engineer their own luck through volume. You hear it all the time, oh, they just got lucky. But what the average person doesn't see is the sheer volume of output required to generate that luck. Elite money masters don't sit around waiting for the perfect investment or the perfect business idea to fall into their lap. They manufacture their own luck by increasing their surface area of opportunity. They launch more products, they analyze more deals, they send more pitches, and they meet more people in a single month than the average person does in a decade. When you are taking 100 calculated shots on goal, striking gold isn't luck, it is a statistical inevitability. Number 12. They transition from labor income to capital gains. This is the ultimate wealth divide. If you are trading your physical hours for a salary, you are paying the highest possible tax rate in the country, and your earning potential is severely capped. The financial elite transition their entire existence away from earned income. They prefer to be compensated in equity, stock options, and ownership stakes. They understand that the tax code heavily favors capital gains over W-2 wages. They focus on increasing the valuation of their assets rather than negotiating a minor bump in their salary. They build machines that generate value independently of their physical labor. Number 13. They master the art of the strategic exit. Building a multi-million-dollar business or portfolio is incredible, but the wealth isn't truly locked in until you know how to exit. Most amateurs hold on to a failing asset because of ego, or they hold on to a peaking asset out of greed. The masters of money know exactly when to walk away. They leave the last 10% of profit on the table for the next guy, ensuring they exit cleanly and with their capital intact. They have a predetermined exit strategy before they even enter a deal. Whether it's selling a company to private equity or taking chips off the table during a bull run, they execute their exits with zero emotional hesitation. Number 14. They force their assets to pay for their liabilities. This is the cheat code to a life of luxury. Most people get a big paycheck and immediately go out and finance a luxury car or a massive mortgage. They are using their active income to pay for depreciating liabilities. When an elite wealth builder wants a new Ferrari, they do not buy it with cash from their business. They take that cash, they buy a cash-flowing commercial property, and they use the monthly rent from that property to pay the lease on the Ferrari. The asset pays for the liability. Once the car is gone, they still own the asset, and it is still producing income. They literally get to live a life of extreme luxury for free. Number 15. They design their money to outlive them. The final stage of mastering your money has nothing to do with your own lifespan. Amateurs want to be rich until they die. The elite want their bloodline to be wealthy for the next 3 centuries. They transition from thinking about net worth to thinking about legacy. They establish generational governance boards, charitable foundations, and strict legal frameworks that dictate exactly how their capital can be deployed by their great-grandchildren. They don't just leave a pile of cash. They leave a financial philosophy and a self-sustaining system. They engineer an economic dynasty that defies the decay of time. And since you have proven you have the focus to stay with us until the very end, Orionxer, here is your secret bonus. The ultimate financial secret is that Enough is your greatest weapon. You see, the trap of the modern world is the endless pursuit of more. There will always be a bigger yacht, a taller skyscraper, and someone with a higher net worth. If you do not define what enough looks like for your own life, the pursuit of money will consume your health, your relationships, and your peace of mind. The most elite money masters eventually realize that true wealth is total autonomy. Once your assets generate more than you could ever reasonably spend, continuing to stress over an extra percentage point is a fool's game. Knowing how to play the game of money is vital, but knowing when you have won the game so you can finally step away and just enjoy your freedom, that is the ultimate flex. If you are ready to stop playing small and start mastering your money like the elite, write the word master in the comments below. It will confuse the casual scrollers, but we will know exactly who the real builders are. Thanks for spending some time with us today, Orionixer. Keep building, keep growing, and we'll see you back here next time. Until then, take care.